Hi everyone, a very good evening to one and all. I'm sure you're very excited for the session. We have Niyati, CA Niyati Shah at the other end. So I would like to brief a little about her. So she is a vertical head at taking care of personal tax at One Finance. She has over 17 years of experience in taxation advisory, and along with being a chartered accountant, she is also a company secretary. She brings in a lot of understanding both personally as well as on corporate taxation. So I'm sure many of us would want to know, how do I save tax? What can be done? And many of us have not even filed our returns. Maybe that's also a case. So 15 September is the last date to file your returns. So probably, Niyati can throw some insights there as well. So over to you, Niyati. So before Niyati starts off the presentation, there is a small awareness video which she would like to showcase first. So I'll be sharing my screen first, and then Niyati will start presenting the entire context. So I'll just share my screen. Maybe one of you all can give me a heads up if my screen is visible. Great. The emojis work wonders.
So today, I'll tell you 5 new avenues that will make your financial god like me. Step 1. ये हैं अनुराधा और आसमान। इनका खुद का घर बनाने का सपना जल्दी से जल्दी पूरा हो, इसीलिए ये सबकी बात मानते। रील वाले मोनू से लेके यूट्यूब वाले सो, किसी ने कहा क्रिप्टो, तो भाई साहब हो गए एप्स में मस्त। किसी ने बोला स्टॉक्स, तो मैडम गई इंडेक्सेस में फंस। गुड नाइट बेटा। 5 साल की दौड़ है इनकी, जिसके अंत में इनको चाहिए अपने सपनों का आशिया। अपने पापा को तो ये पूरे दिन सलाह देते हैं। इनकी बात सुन जाएगा। बस 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 बेटा, हल्दी ट्राई कर प्लीज। लेकिन अपने पापा की एक भी सलाह नहीं लेते। बेटा पहले फॉर्म 16 भर दो प्लीज। दिन के हो गए साल और इन्वेस्टमेंट्स रह गए बेहाल। समय बीतता गया और बढ़ी तो सिर्फ 2 चीजें, छोटू की हाइट और आपस में दूरी। सारे इन्वेस्टमेंट में पास हो गए। लगा उठा रहे हो फोन। पापा प्लीज यार। अनुराधा और आसमान को जो घर चाहिए वो तो मिलने से रहा, लेकिन पापा को मिला उनका रजिस्टर्ड इन्वेस्टमेंट एडवाइजर दोस्त वरुण। बिना फाइनेंशियल प्लानिंग कैसे होगा? मेरी सुनेंगे तब ना। वैसे आसमान को खाने में क्या पसंद है? अब जो पूरी दुनिया की सुन ली और कुछ भी नहीं बनाया, तो एक दिन वरुण अंकल ने खाना खिलाया। आज पहली बार आसमान और अनुराधा के खुले कान जब सही जगह से सही तरीके से पहली बार लिया गया।
लेकिन हमारा घर,
जो फाइनेंशियल प्लानिंग आपको करनी चाहिए थी, आपके पापा ने आपके लिए की।
पापा, please.
जैसे कुछ चीजों में पापा की सुन लेनी चाहिए, वैसे ही फाइनेंशियल प्लानिंग मैटर्स सिर्फ क्वालिफाइड फाइनेंशियल एडवाइजर्स की ही सलाह लेनी चाहिए।
Curious how your connections are doing? Check the catch-up tab.
So I guess, Niyati, that was a really wonderful video. I'm sure many of us would have got an insight on what the video is like. So maybe you can share your screen and start off with the presentation.
I hope the screen is visible now, Steffi. I hope everyone, thank you so much, Steffi, for such a warm welcome, and good evening, everybody. I hope the screen is visible now. Thank you for the emojis, guys. So let's quickly start on basically how we go about. So we have this thing that investments that actually save tax, right? So here we are actually not going to directly go through what we have mentioned in the topic. In terms of investments, we are going to specify, do actually all investments actually save tax? The answer is no. That is what we are going to discuss in detail for the next 1 hour. But more so here, investments we'll be talking about in terms of time, in terms of resources, and in terms of knowledge, how that will help us save more taxes. Okay. So I'll quickly share one QR code for you. This is an employee wellness survey that we are doing across India. There is it basically is it's a primary research that we are doing to understand how financial and your financial well-being and personal finance leads to any stress that comes across during working or during office hours. So it has some few questions on the same. If you can ensure that you can give me an honest feedback on the same and analyze how do you tackle with the same. So I'll just give 1 minute for the same and then we can go ahead. So guys, let's just start now. In terms of basically, as you guys know that whenever you receive salary, it is just about the financial part of it, or there are other things also that are attached to it? So whenever there is year end, you already start thinking about bills, your lifestyles, any vacations that you're planning, any investments that you had thought that once you receive the salary, you'll ensure that. Mostly it is all about in hand that you receive, right? So let's think a little beyond that. Is it that you have to ensure that only AMIs are taken care of? Is it that you have to invest in a particular thing right away so that your taxes are also taken care of, be it any investment or be it any expense? Okay. So this is where most people in India struggle in terms of their finances. So let's discuss a little bit in more holistic way rather than only limited to taxation, because taxation is one of the pillars of the entire personal finance that everybody goes through, be it any age, any situation in your life, or any stage in terms of whether you must be in your early career stage or you must be in your late 30s, or maybe even during the retirement. There are a lot of dependents that you also have. So how do you take your personal finances? Let's little bit discuss on that. Okay. As I said about holistic financial planning, we categorize our personal finances into 6 main parts, okay, wherein your income and expense planning is also there. So herein, what as I just referred to, whenever people receive salaries, the first thing that comes across to their mind is in terms of EMIs that they have to take care of. That obviously income and expense goes hand in hand. There comes investment planning. So more so, I have heard that, and I would want everybody to give me a thumbs up if you also correlate to the same, that I have to get ELSS. I have to invest in ELSS mutual funds because I have to save on taxes. Am I right? Have it? Oh yes, we have someone to say that. So yes, there is this one thing we always come across. We buy investments because we think that let me just buy it, irrespective of whether it is going to only save taxes or it is going to take care of other things as well. So here, the first thing that I would like to address is this is where mis-selling happens. Mis-selling is basically you just reach out to your mutual fund distributor and let him know that, okay, I want to get a mutual fund, basically ELSS, because I want to save on taxes, right? And since it is commission based, people will ensure that, okay, they will not give you the thing which is actually important to you, but rather they will sell you wherein the commission that they earn is higher. Okay, so this is where we would like to emphasize that all the things that you do need not only be with one focus of saving tax, but it should be focusing on your retirement. It should be focusing in case you have any milestone or any goal that you have been planning for yourself. So I think this is also one part which is almost neglected by most of us. Third thing here, I would also like to address about the insurance planning. Insurance planning, I'll just give you, there's this saying which is there in the industry, that whenever a child is born, right, there are two people waiting at home. First is eunuchs, and the second one are the insurance agents. So here in this case, any insurance agent will be waiting for you, because as a baby born, the thing starts in your head that, oh, now that I have a baby to take care of, I will have to get a term insurance because he's a dependent. What if anything happens to me? I will have to secure their future. So without considering whether it is actually needed at that point in time or not, the person is waiting for you, and because his commission is again attached to the same, you will also think that, oh, let me just go ahead and buy it. Whether the premium of it is the eligible thing that you may get in taxes or not, but that is one thing that you consider. But in terms of whether the amount is, the sum assured is correct for you, whether the age wherein you're getting this is correct or not, whether your partner is also having an insurance or not, all these considerations need to be taken care of. We just discussed about term insurance and life insurance. The other thing that extends in insurance is also your medical insurance. Immediately, we also think about, since a new baby is born in the family, we immediately think of, oh, let us just go and add him also in our medical insurance plan that we have already. In case if nobody has, then they start thinking of having the same. So these are the things that continuously everybody must be facing, right? But here the major concern, one of the research that we have also done, as well as I would like to say that it has been also supported by SEBI. In the last week, they had come up with a report wherein it was declared that 22,000 crores of commission was generated just by mutual fund distributors by selling mutual funds. Whether they were sold correctly, no. Whether it was given, whether it was actually aligned to the needs of the person who are buying, the answer was no. So all of these things we need to consider, and then we should go ahead and buy such products, not considering not only the temporary need, but also the long-term vision needs to be aligned for the same. So going forward, obviously, we'll be discussing about the income tax planning as well. But as I said, and I would like to reiterate again, please ensure that whatever products, financial products that you buy should not be focused on investments and insurance. Basically, there are a lot of mis-selling that happens, which we can avoid by just being a little more extra cautious and being aware about the same. So I would also like to give you an example of a car loan. If anybody has, I'll just give you, I'll not name any institution or a bank in that case, but whenever we opt for a car loan, right? So there is always another financial product that is attached to it. So assuming you get a car loan for 12%, however, the other product that is being missold to you will be generating an yield of say 7%. So without much thinking, we just focus on, okay, I have to get a car. I need to have a loan against it. I will ensure the EMIs will take place, irrespective of what are the processing fees, the hidden charges, and the other financial products that are being sold to you. So someone who is giving you a car loan of 12% is giving you a financial product of the same organization, which will yield an ROI of only 7%. So do you see the gap of how 5% basically how they are earning indirectly from the product that are being sold to you? So this is also one thing that we should ensure that we take into consideration where it comes to your overall personal finance. Another one thing, also another one of the major things I would like to address is a taboo topic in India, which is will and estate planning as well. Most of the times, whenever we come across or discuss in families about wills and estate planning, people say, no, that is only a matter which should be discussed in rich households. No, it's not the fact. Even if you have a fixed deposit as less as say 5 lakh rupee, but that's an asset, right? It has been earned. Each and every penny that you have earned is hard earned. So then why not ensure that nominee is attached, nominee is mentioned in it? Maybe there is a possibility that there is a possibility that the nominee that you had mentioned is today you don't want that person to be, or is no more. Then what happens when you have a will? Your will overrides the nomination itself. Everything is taken care of in terms of the legal hairs. Right now in India, there I would like to just even give you a quick number also of the same, that 3 lakh 3 lakh crores is the unclaimed amount that various regulatory authorities are having, which are not claimed by anybody. Reason being, either there is a dispute in terms of who will be the legal head, or you don't have anybody who reaches out to those organizations and claims that money. So if you must have heard about the dormant accounts, right? Why does this thing happen? Dormant amount, you cannot withdraw anything, but that remains with the bank, right? So it is very much important to ensure that you have will in place so that your assets are secured, goes to the person you wish to after you are not there. So this is what is the basis of the personal finance, which I've broadly classified into 6 categories. Thereafter, coming to the taxation part of it, these are the things that, as I discussed, it goes all throughout your life. At different stages, at different times, you need assistance of advisors, people who are fee-based and not commission-based. Okay. So in that case, talking about taxation, there are, again, taxation is something we are in the right time when we are addressing this at 10th of September, because we have the deadline at 15th September, right? Right now is the time when you ask, when your chartered accountants will be sending you your computations, and you will be seeing the self-assessment tax that you need to pay is too high. And then you decide, oh, I should have been doing more saving for basically ensuring all the measures that I needed to do during the financial year. I have not done, and now I have to pay additional taxes on the same. So that is what I would like to address, is in terms of, it is, taxes is not something that we discuss at the year end, right? It needs to be taken care of throughout the year. This will only help us decide and calculate what taxes we are going to pay. And at this point in time, wherein there's a lot of chaos of filing a return, your jobs, multiple other things, and you have a worry of, now taxes also. I will have to reach out to the advisor also. I will have to reach out to my chartered accountant as well. I have to ensure the income tax website is also working fine. Multiple things, right? So if you plan things in advance, it is always better. It helps you having peace of mind. So one such thing is anything that you come across in terms of any investments that you want to go ahead and save taxes for, it needs a discipline for the same, right? Most of you must also be, if you can give me a heads up also on the same, have you ensured that your saving account has a really huge amount which is not invested from a long time? Anybody? Oh, we have few. So yes, I mean, if you can just go through the example that if you have the saving account gives you close to 3.5%, 4% of interest. However, we have two products wherein they not only ensure that taxation benefit is attached to it, but how long-term association with that financial product helps. So quickly going through ELSS. Okay. ELSS, it has a lock-in period of 3 years. It's a mutual fund wherein ATC deduction can be availed. The yield that it gives is close to 10%. However, the amount that is there in our saving account is only giving us an yield of 4%. And the difference of opportunity that we are losing is 6%, which is too high, right? Again, if we consider about NPS, NPS is something that is, I think in most organizations, people have it, but they don't opt for it because of, again, lack of awareness about this product, this particular product. So NPS, there are two ways. Either you invest in your own NPS, or else the corporate, the employer, they will ensure that they also contribute to your NPS. If we see, I think of the last 3-4 years, if we calculate, the NPS is yielding more returns than fixed deposits and also mutual funds. The other mutual funds which don't give you tax benefit. So in NPS, even while investing, you get the tax benefit, while at maturity also you get benefit of taxation. But if you're investing in mutual funds, the problem lies there is, while investing, you don't get any tax benefit, but while you withdraw it, there is a capital gain tax attached to it. So automatically the post-tax and pre-tax impact is taken care of. Plus the yielding, the ROI that comes in NPS is much, much higher. So I think NPS is one product I would definitely like to recommend. If any organization where you are currently working and has this option which you have not availed, please reach out to your HRs and opt for the same. In old regime, you can have maximum of 10% of your basic salary as NPS contribution, whereas in new regime, it is 14%. So that's quite high, right? Though I would also like to address one more thing when it comes to NPS, because it is a part of your CTC, which it is deposited in your NPS account. People think of, oh, I am getting less in hand salary. But even if you get that salary in hand and it's been there in your saving account, which is not yielding anything, or else if you are investing in some other mutual funds, which is also not again giving you any taxation benefit or ROI at the same point in time, then it is always better, right, to go ahead with NPS. It's indirectly, you are only investing. Plus, there is also one taboo attached to NPS that, oh, it has a lock-in period till the age of 60. I will not be able to withdraw the amount from NPS. That is true. I'm not denying to that. But at the same time, don't you think you're building a retirement corpus for the same? So obviously, I'll also share an idea about the same. If you, I'll give you my example of myself. I had invested in NPS since 2015, and right now, as we are in 2025, my NPS total yield of the last 10 years And at the same amount, I had also invested in a mutual fund, which was also yielding really nice at the back in 2015. So if I compare the post-tax amount in terms of gain also and in terms of taxation also, NPS has given me higher value. So that is the reason I was strongly recommending rather, to please go and opt for NPS and ensure that lesser of in hand is not something which is always a bottleneck. Sometimes it's good as well. Okay. So as we take the same example, we have another financial product called PPF. If anybody must have heard about it, then I would, it has this requirement that when you invest in a PPF account before 5th of any month, only then it yields you interest, right? Assuming you had received your salary at generally we receive at the end of the month, but assuming you have received it at in the month next month by 4th, it is there in your saving account, and you just decided, okay, just let me ensure that I will invest in PPF, but I will take care of it either at the end of the year or maybe in the same month, but end of the month. So what happens is, you just, because you didn't act on time, you lost the power of compounding. What had you invested on 4th or maximum by 5th of the month, the interest would have started calculating for the next month. Again, the amount that you had received, the principal amount and the interest for that particular month, would have been considered as the principal amount, and for the next month, interest would have been calculated on that. If most of the people understand what is simple interest and what is compound interest, right? It is actually that we see in all the financial products. Just because we don't act on time or we procrastinate, the direct impact is there in the ROI that we yield. So if you're planning to opt for PPF, it's another good option, because though it is said that it again is a long-term financial product wherein there is a lock-in of 15 years. However, if you invest it for continuously 5 years, you really get a good amount, and the government also allows you at that after 5 years, as on a particular date wherein you want to withdraw a particular amount for any XYZ reason, you can do so, and 50% of the balance you will be able to withdraw. So there is actually not technically 15-year lock-in, but a 5-year lock-in period. So it's again a good option, though in old regime it gives you benefit subject to the 1,50,000 limit under section 80C. However, even if there is no taxation benefit in old regime, in new regime, but in old as well as in new, PPF interest is exempt. So it's another good option. You can go ahead, and I would recommend to invest 1 lakh, if possible, 1,50,000 from 1st April to 5th April of a financial year, and not anything beyond that. I mean, people do have this, that they may divide 1,50,000 and invest 12,500 each every month. That is also another good option. But as I said, it is always better to go ahead and invest in PPF in the initial months of the financial year to yield higher interest. There's another one thing that is almost aligned to the power of compounding, which is, but here in terms of expense and not in terms of income, that is spreading of your tax liability. If anybody could give me a heads up in terms of, have anybody heard about the advance tax? No? Okay, no problem. Okay, we have few. So advance tax is something, it is a tax liability that we pay as in when we earn in the same financial year. So generally people have this preconceived notion that we have to pay taxes only at the time of return filing, which is after the financial year. But no, that's not the case. Government has ensured that as and when you we start the financial year, you're earning, same time you can estimate what is your, you already know from on the 1st of April what is going to be your CTC, right? eliminating the bonus and the variable component, but more or less we have a rough idea about the same. So in that case, since we know what it is, and we can have an estimate of the same, government says by 15th of June of the financial year, 15% of your tax, 15% of your income, please calculate that. Whatever taxes arise in whichever slab rate you are and whichever regime you want to choose, calculate that and please pay that to the government so that you don't have to pay any interest on the same. The second installment the government has pre-decided is the exact date of the ITR filing deadline this year is 15th of September. These are already in place. There is no change in the dates. It's 15th June. And the percentage that needs to be paid is 15% of your total tax liability. By 15th of September, it is 45%. By 15th December, it is 75% of your total tax liability. Until 15th March, that is 15 days before the financial year ends, you have to ensure that your 100% tax liability is actually taken care of. So, but in most cases, it happens that we tend to ignore it. And at the time of filing the return, we not only have to pay the additional taxes, but also interest included and embedded in that self-assessment taxes. I mean, if I'm okay and anybody has questions during the session itself, you can please address it in the Q&A session, Q&A this, and we'll address this at the end. If anybody has, please do the same. So I would also like to address, as I discussed, that advance tax needs to be paid, right? And you need to know which regime is beneficial to you. Only then will you be able to analyze what will be the taxes that you need to pay. But before knowing which regime is important to you, I think knowing your salary is more important than that. So has anybody gone a little bit in detail on the salary slip that you receive every month? Can you please give me a heads up or raise of hands? Okay. Oh, most of the people have. So you must have seen, you have basic salary, you have other components of the same, which are called uniform allowance, or maybe professional development allowance, special allowances, bonus amount, performance allowance. Performance allowance is not actually an allowance, but it's actually a variable component. Then there are such other things, right? So HRA being one of the very important component in your salary slip. So all these, as I said, are very important. You need to analyze whether the basic salary that you are having, is that the correct percentage of your total CTC, because your basic salary impacts your HRA. If you are in a metro city or a non-metro city, in case of metro city, it is generally 50%. And in non-metro city, it is 40%. However, if your basic salary is less, most of you must have been knowing this hack, like most of the people do that. They ensure that their basic salary is a little bit on a lesser side, so that the three conditions that we have for HRA doesn't get impacted, and then they can claim maximum HRA there. So all these factors, as I said, are important. One of the options that other organizations give is in terms of car leasing as well. So car leasing is also something, if you have your EMIs, fuel, maintenance, and insurance taken care by the employer, and if it is not impacting much in terms of your CTC, then be it old regime or new regime, you can take benefit of that as well. So as I said, it is very important to ensure that your salary is restructured in a way which is most suitable to you. It may be suitable to you and not exactly be suitable to me, because I may be staying in a home which is self-occupied by me, but maybe a friend of mine could be in a rented house, right? So I have to ensure my considerations in terms of if I have a home loan, but the person who is staying on rent, the HRA calculations are important for him. So all of this, I would say, it is always best to ensure that when the financial year starts, that is in the month of April, we reach out to our employers according to the regimes and the slab rates. The government generally comes up with a budget in the month of February. So you everybody knows that what are going to be the slab rates for the next financial year, and in that case, obviously, it is always better to go ahead and restructure your salary after having the right consultation from the right expert. And then, as I said, opting for the old or new, though for the current financial year, the returns of which are supposed to be filed in the next year, more so it's going to be a new regime and not old, considering the gap. We'll discuss a little bit in more detail about the slabs and the rate of taxes that are there corresponding to the slab rates in both of the regimes going forward. So yes, declaring the same is also important. In case you're opting for old, giving the information and documents of your exemptions and deductions to your employer is also very equally important, and more so in terms of timeliness as well, because that impacts your TDS amount that deducts from your salary. So all of this is interlinked. You doing one thing with one person and other things. So see, in case you are, for example, you're planning to buy a house, right? You may reach out to somebody who has a knowledge in real estate. Another person, if you want to reach out for, say, car loan, so the agent who takes care of the car loan thing, you may reach out to him. But overall, I would recommend, if there is one person who is your financial advisor and can give you advice on each and every financial decision that you make, will give you a better picture, not only better picture, but help you take right decisions in terms of at the life stage which you are in terms of taxation also, and in terms of your long-term planning as well. So all of this, I think, needs to be considered. Thereafter, once you are ensuring that your salary is restructured, you have chosen the right regime, then obviously you will have to focus more and on the expenditures which are aligned to the tax savings. But as I said, not only to the tax saving products, but as are aligned to your goals as well, be it short term or long term. PF also deduction is eligible for tax saving, which I think most of you know. And then after considering all of this, you will have to ensure whatever taxes are payable apart from salary. So I'll give you an example. Anybody having a fixed deposit of 10 lakh or so, and wherein you see your TDS being deducted and bank asking for form 15G or 15H in the start of the financial year, if you don't want your TDS to be deducted. Anybody aware about the same? Please share with raise of hands. Yes. So in these cases, why does the financial institution or banking institution ask for it? Because they have to deduct TDS. But as in India, we have currently only 10% of your interest, be it your FD interest, they deduct 10% from your interest. And then the rest amount is reinvested if not withdrawn from the FD on a quarterly or a monthly basis. Here in this case, if you are in a slab rate of say 30%, but TDS is deducted only 10% on that interest component, then what about the 20%? That exactly 20% is what you have to file, you have to pay while filing your ITR. However, if this is taken care of while paying your advance tax, then there is not a huge burden that you have to take care in one particular month. More so it's July, but this year it's September. So this is what helps you. In case you have been dealing with mutual funds or stocks, you have been selling it, be it short term or long term, but exceeding 1.25 lakhs, then you also have to pay taxes on the same. There is no TDS over there. So again, if it is short term, now you'll have to ensure that it is 20% that needs to be taken care of. And if it is long term, then 12.5%, irrespective of the slab rate you fall. But that needs to be paid, right? Again, that would add on to the pocket at the time of filing your ITR. So if you pay the advance taxes on time, this burden is being spread over the entire year, and you can manage your finances as well. So that is what we used was the next 2 points about that. ITR filing is not the only year wherein we should think about taxes, but rather the entire year we should be taking right steps for ensuring and securing our financial future. We'll just quickly go through the exemptions and deductions. Firstly, ATC is something that most of you know, and the cap of it is also known to all of you. That is 1,50,000. But here I would like to give an example. I had a friend actually who had liquid funds, could buy the property he was planning to purchase. But because he was thinking that since old regime gives him a benefit of principal and interest, as well as stamp duty if you are going for the first in the first year of after buying the property in under section ATC. But at the same point in time, he opted for all he already had PPF account also, and he was taking care of it by investing 1,50,000 there. So here in itself, the principal amount of which EMIs he was paying, that was because it was already on a higher side, which was above 1.5 lakh, he couldn't take a benefit of the same. But that was his wrong assumption that, oh, let me just go ahead and take a home loan and I will get the benefit of all principal and interest. Yes, he got the benefit of the interest, but not of the principal. So at this point in time, everybody, it's the financial advisor who gives you an idea about whether you have exhausted the limit, whether you are being compliant to any taxes, any laws that needs to be taken. So all of these decisions need to be also aligned to that particular thing, right? Not only in principal amount, but the stamp duty and registration charges also of that particular property can be claimed in the immediately in the year wherein you have incurred those expenses. So all of it was actually a higher amount than the deduction that could be availed under section ATC. So as I said, if had he opted for not taking a home loan and selling his assets, he would have taken benefit of another section called section 54F, which we'll be discussing a little later. But this is what he could have done, right? So it is not just that simply you go ahead and take a decision, because there is a possibility that we may not be aware about a particular provision which are minutely known to the experts, right? So yes, PPF, NSC, investments, life insurance premiums, even your if you have 2 children, the school fees that you pay, that are also included in that 1,50,000 deduction that we can claim under section ATC. So this is also one thing that everybody needs to ensure, that you rightly spend or invest considering the upper caps given for deductions and exemptions. We have another section called ATCCD 1B, wherein 50,000 of contribution from your own funds to your NPS account that can be claimed under this section. There's another section. So these ATC and ATCCD 1B, that is the first 2 sections, are only limited to old regime and not available in the new regime. The third one is section ATCCD 2. Here, as I had discussed, the employer contribution of to your NPS, 10% in old regime, 14% in new regime. This is exactly the same. Here you can go ahead and reach out to your employees and opt for NPS and claim benefit irrespective of the regime, which is more beneficial to you. We have another section, again limited to old regime only, that is section 80D. In this case, I would like to discuss this a little bit in detail. Here, if you are not a senior citizen, but you are spending in any premiums for any insurance, medical insurance for yourself, your spouse, your children, then you can claim up to 25,000 of the same. However, if you are ensuring that you are also taking care of your parents' medical insurance, then, and if they are not senior citizens, then additionally you can take into account 25,000 as well. So here you can claim 50,000 rupees. However, if your parents are senior citizens, then 25,000 for you and your family and 50,000 for your parents. That brings you to 75,000. So in this amount of 75,000, 50,000 or 25,000 each, if the medical insurance premium is, so let's take an example of say 25,000 itself. You have a premium that you're paying close to 17,500. However, there was a full body checkup expense which you had taken during the year, wherein you had incurred close to 6,000 rupees. Here in this case, in addition to 17,500, you can add 5,000 rupees, which is a cap for preventive health checkup during the financial year. So here you can ensure that you are well within the limit of 25,000. However, you are also getting benefit of your preventive health checkup. So going forward, if anyone is not claiming this, and if you're yet to file your return for this financial year under old regime, please take this also into consideration. There's another section 80E, wherein in case you yourself have taken any education loan, or for your spouse, or maybe in case you're a legal guardian to anybody, then also you can go ahead and claim interest expenditure for any higher education loan that you are paying. There's one I have not written here because I just wanted to discuss about it. In case you have any EV EV is basically electric vehicle, then in that case also any interest component that you are paying for the same in terms of its EMI, please ensure that also you take into consideration while filing your ITR for this year and next year under old regime, if that's beneficial to you. There's another section called section 80U. This is in case anybody has are specially abled and as per the severity, they can also claim deduction. Government has provisions for the same as well. Coming to the old versus new tax regime, I think most of you have this thing, right? Which regime, why is when is old regime beneficial and when is new regime beneficial? What is the break even? How much deductions and exemptions would we have to calculate and count, wherein I can see old regime being beneficial? Has anybody come across all these doubts and thoughts? If you could just again raise hands. Oh yes. Okay. So as I would say, there is no clear cut break even amount that year old regime will be beneficial or new regime will be beneficial. Yes, but I can give you a rough idea. As I had said, anybody who has HRA and home loan, these are the two people, because the amount of deductions and exemption that you can claim are higher, particularly over here. In this case, obviously the old regime will be beneficial, otherwise new regime, specifically for this the return filing that we are supposed to do for the financial year 24-25. But going forward, I believe to 90% of the people it would be new regime only, because that is what the government is emphasizing and actually promoting as well. Because I mean, let's quickly shift to the slabs, the reason of which this thoughts come into play. Because going as I just mentioned, for this financial year, the return of which we are supposed to file for the next year, 90% of the people are going to opt for new, because from 0 to 4 lakhs there is only 5 till 4 lakhs actually there is no tax. Then from 4 lakhs to 8 lakhs we have 5% of the tax to pay. From 8 lakhs to 12 lakhs it's 10%. From 12 lakhs to 16 lakhs, it is 15%. From 16 to 20 lakhs, we have 20%. 20 to 24 lakhs, we have 25%. And above 25 lakhs or 24 lakhs, we have 30%. And this is for the new regime. However, for the old regime, it is same, which we have from the last couple of years. That is from 0 to 2.5 lakh, it is no tax. From 2.5 lakh to 5 lakh, 5%. And from 5 lakh to 10 lakh, directly 20%. And anything and everything that you that you earn about 10 lakh is 30%. So if you can see the difference, that about 30% in old regime, it is 10 lakhs, whereas in new regime, it is 24 lakhs. So this in itself speaks a lot and validates why I was suggesting that mostly new regime would be beneficial to majority of the taxpayers in India going forward. Okay. As I had discussed about section 54F, I would also like to give you some more ideas specifically for those who are planning to buy a house soon. Anybody who's planning to buy a house or has a goal of buying a house in a couple of years? Okay. So firstly, let's, I'll just quickly give you, there are 3 sections. I'll not make it very boring for you, but yes, there are 3 sections wherein you can go ahead and take benefit while not paying taxes. First is, and also obviously, and ensuring that you have a nice house, your dream house to buy. Firstly, it is section 54. Section 54 speaks about wherein if you have one residential house, you are selling it and you're buying a new residential house. So this is one thing, but then the concerns raised here are, if I'm selling a house, then obviously there will be some sort of profit that when I had purchased it, when I have been selling it, whether there is an indexation happening, not happening, but there, I mean, considering all of it, but you still derive at a profit. That profit in income tax is called as capital gains, and that capital gains are taxed, which are called as capital gains taxation, right? Which is either at 12.5% or 20%, considering the indexation benefit, if extended or not extended, respectively. So if you don't want to pay this capital gains, that is where government says, okay, whatever funds that you have been receiving from selling a residential property and buying a new one, you can reinvest that amount there and ensure you don't pay any taxes. But as government has given this liberty, obviously there will be some conditions attached to it. So they say that it is 1 year before selling the house or 2 years after selling the house, you should have bought a new property. Then you can go ahead and claim section 54. However, there is another section wherein you're selling a house, but you're not keen on buying a new house. Then in that case, government says there is a section 54 EC wherein you can go ahead, not pay taxes on the profit. However, it says government has notified 4 forms. Basically, they are National Highway Authorities form. These are actually PFC forms also. All of these Rural Electricity Corporation, it's not forms actually, sorry, it's bonds. So all of this, if you go and invest, it has lock-in period of 5 years, and it gives you not a very great ROI, but a reasonable coupon rate or an interest rate, but you don't have to pay taxes. So it is basically to ensure that the infrastructure in India is properly regulated, and so government has released and notified such forms wherein you don't have to pay taxes also, and you can sell the house as well. That is another. So the question that I'd asked, who wants to go ahead and buy a house? For them, this is one of the most crucial ones. If you don't have a house and you're planning to buy a first house, there is section 54F, wherein if you are basically having mutual funds, you are having equity stocks, all of this, or any other commercial shop, or any land, to be not necessarily, not agricultural land, but any urban land. If you are selling all of this and you are trying to, collate funds and buy a new residential property for yourself, all of the profits that you derive by selling all of these assets, obviously they should be long-term assets. And if all the profits you invest, not only profits but entire sale considerations that you invest in the new house, there is not a single penny that you will have to pay, subject to the entire consideration that you have received from each and every long-term asset that you have sold. Apart from a residential property, you can go ahead and claim it. Just one caveat here I wanted to discuss is in section 54 and 54 EC, which I discussed previously. In that case, government says you have to invest only profit in the new house. However, in section 54, if you must have heard, I had emphasized in on sales consideration. So whatever amount that you have received as sales consideration, wherein the profit is embedded into the same, entire sales consideration needs to be invested. Only then you can ensure that you'll be not be paying any taxes. Okay. As I had discussed in section 54F that before selling a residential property, government gives you an opportunity of 1 year prior and 2 years later. That is also extended in section 54F as well. However, there is a possibility that you will have to sell it could be residential property, it could be ESOPs or stocks or mutual funds, but because they are yielding good amount right now, a good sales consideration, but you are planning to buy, but you have not finalized onto the property yet. So government also gives you a benefit that even after trying, you have not zeroed onto the house, you can go ahead and ensure before filing your return, you invest in capital gains scheme. And after you decide onto that particular property, you can withdraw the amount from capital gains account scheme and then reinvest in the house. So that also government has taken care of. Okay. So as I said, these all the three sections which I discussed are to be can be availed only if these are only if rather if it is the assets that we are selling are long term in nature, otherwise not. Okay. So as I said, ensure that your overall things are also taken care of. One more major point that now that we have a little short of time, I'll quickly discuss tax harvesting is what I wanted to emphasize on more so because I'll give you an example. Assuming say Steffi has 5 lakhs of ESOPs and I also have 5 lakhs of ESOPs, right? But I also have some, and so Steffi also has say a portfolio of another 15 lakh rupees, and I also have the same. However, I want to ensure that I don't pay any taxes. But Steffi would say, okay, if I'm selling 5 lakh of my ESOPs after and assuming she's generating a profit of 3 lakh rupees, but 1.25 lakhs are exempt. So she'll have to ensure that on the remaining amount, she's paying tax of 12.5%. However, I would not be paying that. Why? The reason is because the other portfolio, the scripts or any other mutual funds that I have in my portfolio are loss making. What can I do? I can actually redeem them or transfer them or sell them and ensure I book a loss in my financial year. With the loss of that will be set off against the profit that I've earned from the ESOPs, and I will be paying no taxes. So this is the concept of tax harvesting, which is generally done at the end of the financial year, more so in the month of February and March, to be very honest, after analyzing how much profit you have been earning in the entire year. Okay. Thereafter, there is one thing I would also like to discuss is now that we have too much discussion on tax planning. So how tax planning helps you in wealth planning also. As I said, right regime, right investments, not only focused on taxes, but also on the other aspects, be it retirement, be it will and estate, ensuring your loan also. There is a possibility, right? That I'll give you an example, a quick example here. Assuming my organization is giving me a loan, which is interest free. And I have another alternative option wherein I'm paying a housing loan, which is close to say a 10%. If my organization is giving me an interest-free loan and I can avail that loan and ensure I close my home loan, right? You are saving, it may sound that, okay, your home loan is helping you save taxes, but at the same point in time, we need to understand that I am ensuring that I am having a loan which is interest free is going to give you more benefit to me rather than limiting my thought to only taxes. So this is one of the example wherein understanding your entire finance is important, and not deciding on one product or one decision at a time. So again, I would recommend having a right financial advisor who is aware about your entire personal finance, is the right person, who doesn't sell any product but is fee based, because he knows that his advisory is not going to be dependent on what you are earning or what benefit you are going to derive from any particular product. Moving forward, there are some because as we are just close to the deadline of the ITR filing, I would just want to quickly discuss on the recent changes right now in the ITR 1, 2, 3, and 4. Basically, these are how do I say it? Maybe you must have come across your chartered accountants where you're filing your ITR, that please share me the documentation this year. I need your policy number. I need your loan sanction dates, all of these, right? If anybody has come across any of such instances, please give a heads up. Nobody? Oh, we have someone. Okay. So yes, this time we have to also give our policy numbers for health insurance and medical insurance that we were paying from the longest time, which was not there till the last year, but this year it is mandatory. For capital gains, earlier it was you have to file ITR 2, you cannot go ahead and file ITR 1. But now if you have any long-term capital gains up till 1.25 lakh, which is exempt from taxes, that also you can go ahead and file ITR 1, and not necessarily you have to file ITR 2 only. So there is one change there. For HRA, now place of work needs to be mentioned, and obviously that is going to impact your HRA percentage, be it 40% and 50% in terms of metro and non-metro cities, because what people who are remotely working were taking undue advantage of the same. There are, as I said, in ATC and ATD, there are policy details that needs to be shared. Same is extended for loan-based deductions also. If you have a home loan, a car loan, specifically in terms of electric vehicle, you also need to share the details of which bank account, which bank or financial institution you have, in case you have an account number for the same, the loan sanction dates, the closing balances as on 31st March, all these needs to be shared. Okay, so there are some major changes this year. Please ensure while filing your ITR, although it may not impact your tax liability, but yes, for being tax compliant, ensuring disclosures also correctly is of utmost importance, and that can't be overlooked. If I may know, anybody who is filing the ITR themselves, DIY, anybody? Okay. So yes, though I would not personally recommend going with DIY filing this year, but if you think that you can manage, you have the right knowledge and awareness about how to go about it, you may, but please ensure that I'll just quickly give you some pointers which you can keep in mind while filing your ITR. Firstly, please ensure you don't select the wrong form. For ITR 1, if you have one house property, if you have salary income, other sources income, and long-term capital gain till 1.5 lakh, 1.25 lakh, you may go ahead and opt for ITR 1. In case you have capital gains, carry forward, brought forward of losses, then please opt for ITR 2. In case you have business income apart from the other incomes, please opt ITR 3. And in case you have presumptive taxation, in case of business only, but if you're opting for presumptive taxation, ITR 4 is the right form. So these are because if you don't ensure the right form is taken care of, there are defective notices that will be sent to you. And if the notices are not responded in a timely manner, it will be treated that you have not filed your ITR itself. So yes, this is one of the major mistakes that I have come across people who do DIY filing. Second is, because we have two regimes in place, selecting the right regime is also equally important. Here we at One Finance had done a recently a research wherein 33% of the taxpayers chose the wrong regime, because everybody at their organization have to give this declaration during the initial months, that which regime they are going to opt, right? So by just ensuring that they just randomly selected regime, which impacted their Form 16 and their ITR filing and costed them close to 51,000 rupees. So in terms of taxes, so I think that is also one thing. It's an average amount after the research that we had identified. That is the reason. I mean, that is one of the major other mistakes that people do. So please ensure you calculate under both regimes, which is more beneficial to you. Please go ahead with it. But also at the same point in time, for basically any salaried individual, you can change regime year on year. But anybody who is into business income, they cannot do that. Only once in a lifetime they can shift the regime, unless and until going ahead in future, government mandates a particular regime. Okay, so this is one thing. Another thing, wrong deductions and exemptions. Here, more so, I would also like to discuss a little bit on HRA. So HRA, who basically most of the people who are claiming HRAs, they believe you have rent receipts. You can go ahead and opt for basically HRA amount. But no, that's not the case. You have to ensure that the PAN numbers of the person who you have paid the rent to is also mentioned in your ITR. Or in addition to that, the bank account of yours should show that you have paid rent to the other person. So this is also one thing that you please take care of, and don't go ahead and wrongly, if you are doing that, please don't do that. One more thing, most of the people are not aware about this fact that if you're paying rent more than 50,000 rupees per month, there is a tedious compliance that needs to be done before filing your ITR. Basically, the deadline of which was 30th April for the last financial year. But still, if you have not done that, if you have not filed the TDS return, please ensure that you do so before filing your return, so that you are tax compliant. And obviously there will be interest and penalties attached to it, but doing this right now will still save you from paying additional interest and penalties by not at all doing it. So these are the two main important things I would like to address. And then the fourth point here is in terms of accurate reporting of income. So please ensure that another one of the major things, skipping onto the incomes to ensure that you don't pay taxes is the not right way to go ahead and file a return. Everything, there is a lot of exchange of information that happens between different governments, be it state government. One such example I can give you of, if you buy a property and you register at the stamp duty authority, this information is reflected in your AIS. This is because stamp duty is governed by state government, and income tax, though basically governed by the central government, these exchange of information is shared. And if you have not ensured any TDS compliance there also, that is highlighted and the amount is recovered after sending notices to the taxpayer. So please, again, the same thing, ensure that is also taken care of. So the last two pro tips I would like to now conclude with is, in case you have your Form 16, which is not matching with your 26 AS, AIS and TISs, please ensure that that has been reconciled. If you think there are some major changes, reach out to your employers, ask them to revise your Form 16 by revising the TDS return which they have filed during the year. Because if your AIS and TISs are not matched and you file the ITR, the chances of receiving the notice are too high. And in case you are not aware about any income sources, AIS and TIS will give you the right income, and you can go ahead and take that income from there. But yes, in addition to this, don't even blindly go ahead and rely on AIS, TIS, because there is a possibility that there would be double reporting of one particular income or sell of any securities. So I would, reconciling is the best way to go ahead and then file your ITR. I think that's about it. Thank you for being a patient audience and being there throughout. One last thing I wanted is, as you do before the session started, as we discussed, it's the primary research we are having, and this is also another QR wherein it will help you what we have discussed in the last 1 hour, and we can reflect on that. So just like another 10 seconds, and I think we can immediately go to Q&A.
Yeah, so if you guys are not able to scan this QR, you can use the link that I've dropped in the chat. The idea is we were going to pick 10 lucky consumers who will not only get free ITRs from us, and these ITRs are not going to be filed by some AI or bot, but our professional chartered accountants like Niyati herself are going to help you file the ITR, and it is going to be free of cost completely. Apart from this, we also have a personal finance club where we do a lot of these sessions very regularly. We have a quick WhatsApp group where you can ask such questions. Like today also, we have so many questions and I tried to answer, but it's not possible to answer all of it. So there is a group that you can join. It's again free for Pluxee users. So just put in the detail if you want to join the personal finance club or if you want to get your ITR done. Whatever it is, just put in and our team will get in touch with you today itself and will help you with ITR and joining the club. So apart from this, Niyati, what I'll do is I'll read out 1 or 2 questions and you can maybe answer them right away.
Perfect.
Yeah. So we have the first one from Rohit Mathur. He's asking, does will needs to be registered?
No, not necessarily. A will can be on a plain paper, and just witnesses, 2 witnesses are required, and you can go ahead and ensure that will is there in place. Registration obviously will help you as a legal evidence, but it is not a mandatory thing. You can go ahead and keep a will on write a will on a plain paper.
Okay, awesome. I hope Rohit, your question has been answered. Next question is by Sahil. When we change the company, previous company calculates tax for the year what we earned in that company, not considering future income. Now, if we do not share FNF with new company and there is tax liability, is there any extra interest that needs to be paid at the time of ITR?
Yes. So, if you are switching your employer during a financial year, it is very important that whatever you have been earning from your previous employer, that needs to be shared with the new employer, so that accordingly the right amount of TDS is deducted, be it less or more, even by previous. If there is any mistake by the previous employer, also that can be rectified by the newer employer. So it is important if that doesn't happen, because as we in India we have slab rates for different incomes, right? If that is not taken into consideration, they will start it from zero only. Accordingly, that will impact your interest at the time of filing your ITR in terms of self-assessment tax. So I would recommend, and there is one option also if you see in your form 16 about this particular column, wherein the amount from the previous employer needs to be mentioned.
Okay. Next question is by Satish Gopalan. Hi, I have a property which I have rented out. My tenant will be filing the new regime, and so he will not be taking HRA allowance for the new tax regime, under the new tax regime. Should I declare my property which I have rented out? Will the income tax people be able to figure out this, as my tenant cannot claim HRA? Thanks. If I do not declare and the income tax finds it out, how much penalty would I be paying?
So as I said, HRA needs to be rightly disclosed. If you have claimed the wrong amount in your HRA, so basically the tenant is actually considered to be at fault, because he needs to disclose everything in terms of TDS returns and other compliances. And in that case, you will have to. There is a penalty of 1% per month. If you have not deducted, if you have deducted but not deposited, it is 1.5%. And if you have not filed the ITR, it is rupees 200 per day. So I think that's a huge penalty in terms of TDS filing. However, I think what Preeti also mentioned is in terms of any liability as a landlord that comes to you, then if you are reporting the right income, then there is no liability. But as I said, both the tenant and landlord needs to correctly report the income in their ITRs.
One last will just take by Priyanka Rathod. I have opted for old regime and filing ITR 2. After considering all deductions, taxable income came below 5 lakhs. Still, it is not considering my deductions because of 115 JC. Please assist what should I do so that my deductions will get considered.
It seems it's not possible that your deductions would not be considered. If it is less than 5 lakh, it will definitely consider your deductions. I think there is some technical issue is what you are facing, I believe.
Okay, so although we have a lot more questions, but I don't think we'll be able to answer it. But like I said, there is this QR you can scan, or this link that I've just now again dropped. Just fill it in. We from the team is going to reach out to you very soon. And yeah, so if anyone has anything else that you want us to help you with, just put it through the form, and we'll reach out to you. With that, I would want to thank everyone for being so patient, and hopefully you all got the value out of this that you were expecting since the start. And yes, Niyati, anything from you to the audience?
No, thank you. Thank you just for being a patient listener, especially at the day end. Taxation being considered as a little boring and a heavy subject. So thank you. Thank you, everybody. Thank you, Steffi.
Thanks, Niyati. Thanks, Preeti. Thank you so much. Have a great evening.
You too. Bye-bye. Thank you.
Bye.